Hi, Tim Biggam back again this week, and we're finally seeing a bit of red in the equity markets as the sell-off that has been somewhat trickling down has a little bit more veracity today. Last I looked, the S&P's down more than 1%, which will be their biggest down move in well over 2 months. So just showing you the kind of complacency that we'd seen in this marketplace before today. We saw some bad earnings coming out of Cisco, Walmart as well, some overseas news that can be a little bit disconcerting. Certainly all eyes on Apple after the past 2 days with the Carl Icahn, George Soros sort of tag team approach there. Certainly the shorts, if there were that many in Apple, covered very sharply here. Apple traded briefly above 500 yesterday. I'm actually doing a kind of one-day wonder trade, I call it, selling some 485 puts that expire tomorrow and buying some 475 puts, getting about 80-cent net credit, just really looking for Apple, which is trading right around that 495 level, not to have a down more than 10-point day tomorrow. If it doesn't, I collect that 80-cent premium. If not, I have defined risk and can cover certainly at something well less than that 920 loss. So just looking to take advantage of some fairly elevated vol on Apple here. Also looking at the stocks like Tesla, which seems to have run out of steam here. The stock chopping right around that 140 level. A lot of activity in the 140 strike for tomorrow. So I'm kind of playing a pin here for tomorrow at 140, selling both the calls and puts on Tesla, buying the wings, buying the 145 and 135s, getting about 350 to 370 for that spread. So banking about 360, let's call it, with about 140 at risk. So really almost a 2.5 to 1 shot, that Tesla will remain about 140 come tomorrow. So I really like the probabilities of that trade. And really when it comes down to it, I think trading's all about probabilities, as we talked about, and risk management and position sizing, as viewers here well known with me. I harp on make sure your position size is proper and your risk management in place, but also probabilistic trading, looking at where the VIX was a couple weeks ago. I'd mentioned, buying some puts simply because I like that kind of asymmetric payoff, finally getting rewarded for it. So, taking maybe 2 or 3 small losses and then hitting one big gain today finally. So very much so you want to make sure, again, the position size is in place, risk management in place, so you can stay in the game. Warren Buffett's first rule of trading is don't go broke. Second rule is don't forget rule 1. I highly adhere to that rule as best as I can. Staying in the game is the key to it, certainly in this kind of market environment. So be interesting to see going forward whether that taper on, taper off scenario will have a diminishing effect. Certainly today's kind of jobs number put a little of the taper on the scenario back in place, which is perversely somewhat why we're seeing some weakness in stocks with a better jobs kind of report. So with earnings growing only 3% year to date, but the market up almost 18%, this multiple expansion has to be fueled by, easy money. If the easy money comes to a stop, I think you'll see that multiple come down, which means a lower stock market. I'm still calling for range bound here, 1,700 or so to the top, 1,550 to the downside. August, September, normally seasonally weak months, so I continue to, kind of sell rallies, and then if we do have a sharp sell-off, we'll buy dips, positioning by either selling out of the money call spreads or buying some puts up around here, and then if we do have that dip, trimming out of those long puts and selling some out of the money put spreads. So until next week, this is Tim Biggam, and I'll say it again, keep your position size accordingly and keep your risk management and stops in place. Take care.